ESG-focused funds we know are some of the hottest investments, primarily because of the belief that an ESG fund means high-quality management teams and improved returns, all while doing good. But study after study shows ESG investing may not be linked to improved financial performance. So a review of over 1,000 peer-reviewed ESG studies found that, quote, the financial performance of ESG investing has, on average, been indistinguishable from conventional investing, often because they mimic indices.
It's such a vague, broad term that you can really shove whatever you want into it and call it ESG, charge higher fees.
The 20 largest ESG funds are largely allocated to information technology, and that's the trend. The concentration is in information technology, with Alphabet, the parent of Google, the most commonly held stock in 12 of the 20 largest funds, highlighting concentrated risk in one sector of the economy, and almost zero allocation in energy, making fund concentration one of the key drivers behind the recent short-term outperformance of ESG funds. And yet managers can charge much more for the ESG fund title.
To put that in dollars and cents terms, you're paying 20 extra bucks per year on a $10,000 investment in an ESG intentional fund relative to what you would if you invested in a fund that was ESG agnostic.
And given tech has been responsible for much of the run-up in ESG ETFs as tech takes a turn lower, investors can prepare for these funds to probably follow suit. David?
So interesting. So yeah, you're ending up owning Alphabet and paying more for it, is what it sounds like, Christina.
Exactly. That's exactly what it is.
It's funny. I wonder if Amazon figures into that at all. You know, people forget what a large carbon footprint that company has, given obviously the retail component of it. I don't know if it gets included in ESG buckets as well, or perhaps it's excluded because of that.
Oh, no, it does. Microsoft, though, is actually one of the second largest weighted stock in a lot of these funds. But and I didn't see Amazon on like the top list for a lot of it, but definitely Microsoft. You can overlook like a lot of these companies' carbon footprint, right? Because the ESG scores are just a giant score with information that the company provides. So, and all of these scores vary across the board. So it really depends on which rating firm and which information they're going to use. And it just varies incredibly.
Shepard Smith here. Thanks for watching CNBC on YouTube.